Okay, about 23 minutes and 44 seconds and counting down to the RBI monetary policy. The decision should be out at 11:45. And the unanimous consensus expectation is, of course, that there will be a 25 basis point cut as far as RBI's repo rate is concerned. And of course, we'll sort of take you through expectations, previews. We'll have our entire team. My colleague Lata will be, of course, joining in with her take. My colleague Ritu will be with us to tell us what the bankers and the economists poll is really throwing up. And of course, we'll have lots of guests joining us at about 11:30 to take you through what to expect. So at 11:45, the decision comes and we'll analyze that. 12 noon is, of course, when the RBI governor takes to the mic and addresses the press and takes questions as well, more importantly. So that's essentially the schedule, for the next 45 odd minutes or so. The market is, down 66 points. It's been that way now for a while. 11,955. So it's, under pressure. But I think it's not really so much about what the RBI may do. It is essentially about what has already happened, which is the DHFL default and the rating downgrade by multiple notches that we saw from more than a few rating agencies. Will the RBI address that? In what form? I think that is top of mind, really. And I think that is number one. And maybe number two is what happens to rates and how much more accommodation the RBI thinks is possible. Ekta.
Yes, absolutely, Prashant. And in fact, the markets are going in a bit sluggish. So we have the Bank Nifty, which is down around 0.6% as well. And we have the yield, which is, however, quite positive at this point in time. So sub 7%, like we've been pointing out. So currently at around 6.991 currently for the 10-year. It has softened versus the close of around 7.02% on Tuesday's trading session. For the rupee, it has depreciated as compared to around 69.25, where it closed at on Tuesday's trade. But first up, we have Ritu Singh, who is joining in with the highlights of the key findings of the CNBC TV18 monetary poll, where majority of the market participants are expecting a rate cut today.
The Monetary Policy Committee of the RBI is expected to cut repo rates for the third time in a row, bringing it to 5.75% according to our poll. Now, while on one hand, low growth and soft inflation will build the case for a rate cut, uncertainty about oil prices, weak El Nino conditions, slow transmission of rate cuts by banks could hold the RBI's hand. But of course, the majority seems to think that the case for a rate cut is stronger. Therefore, 70% of the respondents to our poll expect the repo rate to be cut by 0.25% in this policy. 10% are even expecting a 35 basis point rate cut from the governor. For the full financial year FY20, majority of the respondents expect a 50 basis point cut. Some even expect up to 100 basis points cut. Now, on the macro picture, 70% of our respondents again expect RBI to lower the GDP growth forecast for FY20, and accordingly 70% of our respondents also expect the GDP growth forecast for the first half of FY20 to be lowered in tandem. However, for the second half of this year, GDP forecast of 7.3 to 7.4% growth may be left unchanged. Do remember, the growth had slowed down to 5-year low in the Jan-March quarter of 2019, and that may well be one of the factors that pushed the MPC to go for a rate cut. The other big factor, of course, will be inflation, and the majority of our respondents expect the CPI forecast for the first half of FY20 to be left unchanged. As for the second half of FY20, half of the respondents expect that 3.5 to 3.8% CPI projection to also be left unchanged. Do remember, CPI edged up in April to 2.92%, but it continues to remain well below RBI's comfort zone of 4%. Another factor that could again support a rate cut by the MPC. However, the economists polled by CNBC TV18 do not expect RBI to change its stance from neutral to accommodative just yet. And lastly, the statement of the policy itself, that is expected to be far more dovish compared to the previous policy.
Okay, 100% more dovish. So all the participants are expecting it to definitely be a much more dovish commentary from the RBI. But Lata is also here with the editor's take on the policy expectations. Lata, over to you.
Well, I think the rate cut is in the bag, and my sense is 50 bips, even in Ritu's poll, is a minority, and it may not be resorted to because the previous 50 bases have not been transmitted. You may not want to waste firepower. In any case, the next policy is 8 weeks down the line. You can always give a 25-25 see that it is transmitted. The second point about liquidity, that even as Ritu pointed out, that will be the more important issue to look at. The story that we have been running on CNBC TV18 is that liquidity is already in surplus since June 1st. So the old liquidity grouse is already gone. And the Reserve Bank will actually now talk the walk. It has already walked by doing OMOs and stuff like that. So it will, in my estimate, give the stance as accommodative, and in various other ways try to say that the current surplus liquidity will be kept that way. That's my best guess. Now, so accommodative stance is what I'm expecting from neutral, though my own MPC voted 4:1 in favor of neutral. The one man, the chairman of the committee, voted accommodative, and I have a great regard for him. He usually calls the RBI right.
Okay, so that is Lata's take there. Let's also hear out what Uday Kotak is expecting from the central bank today. Listen in.
I think 25 basis rate cut is reasonably baked in by markets, but it has to be combined with transmission. And for banks to transmit, they need their cost of deposits to come down. For the cost of deposits to come down, alternative instruments should be at reasonable parity.
Okay.
And this is where the issue is. Small savings even now pay over 8%. And a 20% of delta mobilization of fiscal deficit is coming from small savings at much higher rates than government securities rates.
Right.
So bring parity back and make sure that transmission of rates happens through better liquidity and lowering of deposit rates. I would like to see, obviously interest rates need to correct downwards. I would like to see liquidity continue to get better. And we need to also make things easier. If you look at the entire situation, there's a lot of preemption of high rates of interest paid on savings. For example, small savings rates by the government. They're much higher than the deposit rates of banks. Therefore, if banks have to get deposits, there has to be some parity in how the interest rate cycle works.
Okay, so that's the expectation from Uday Kotak himself, that transmission would be something crucial to watch out for as well. But let's get in a quick technical check on the markets before we start talking to our guests on the policy expectations. Ashwini, over to you. What are you recommending on the Nifty as well as specific stocks? It's turning out to be a down day. Are you seeing any sort of buy on dips to come through?
See, the issue here is that this market was finding trouble going up anyway. The Monday's rally, which was 170 points on the Nifty, has kind of now priced everything. So whether it's 50 or 25 or whatever else, chances are that the market is getting into a phase of correction. And my sense is it will be a multi-day style correction. So nobody should be taking long positions into the policy. Having said that, individual stocks, Escorts is a sell with a stop of 592, target of 570. Apollo Hospital is a buy with a stop of 1350, target of 1400. And BOB is a sell with a stop of 132, target of 124.
Okay, so those are some trades, but basically Ashwini's broad view is don't go long. This seems a corrective phase more than anything else. Ashwini, will sort of have you back in a bit. Let's bring in our guests who are joining in. Starting to joining, Anant Narayan is a professor at SPJIMR, and we have Kamal Mahajan from Bank of Baroda joining in. First up to just discuss what expectations really are at. Gentlemen, good morning. Thanks very much, both of you. 15 minutes now, we'll have the decision. Anant, any doubt at all in your mind that there is a 25 basis point rate cut in the offing?
Morning, Prashant. We should always be doubtful and never second guess the MPC. But I think base case 25 basis points rate cut. And for a change, I agree with Lata. I think we will see a stance of accommodative. Clearly, the market is focused a lot more on transmission of rates, as Uday Kotak just mentioned on your channel, rather than just the quantum of the rate cut. In the past, we've seen rate cuts not really transmitting into the system. To that extent, liquidity going into a surplus is very helpful. What the market will want to see is that liquidity will stay surplus for a while now. That seems to be the base case. But I think a reiteration of an accommodative stance will give comfort to the market that liquidity will stay for a surplus for a while, and that will allow transmission to go through better. So overall, 25 basis points and accommodative is what I expect. And of course, then all eyes will be on the budget, on monsoons, and so on and so forth for future trajectory of monetary policy.
We have Upasna Bhardwaj of Kotak who's joining into the conversation as well. Before we get to her, Mr. Mahajan, what is your sense in terms of transmission? Because the liquidity scenario has improved in the month of June. What is your sense in terms of whether or not there will be more transmission this time round, and by how much?
Yeah, with regard to transmission, we have to understand one thing, that it is not merely liquidity as a system as a whole. What has happened is, because of higher credit growth and lower savings, lower deposit growth in banking, that is what is really affecting the whole scenario, that which is going against transmission. So of course, liquidity has to be there, but this has to be planned in a manner that it comes to banking system as well.
Okay, what is your expectation though from the RBI policy today, both in terms of stance as well as
25
rates?
basis point. Yeah. The rate we can say 25 basis points, though there is a lot of headroom looking at the real rate of interest. But yes, for now 25 basis points, and once transmission starts happening, maybe we can see further.
Anant, I guess beyond the rate cut, the thing everybody is watching out for is also this entire DHFL episode, right, which is very recent. In your mind, will the RBI address it in some way today?
Great question, Prashant. And of course, the DHFL issue came after the deliberations of the MPC were largely concluded the previous 2 days. I'm sure it will be on the mind of the MPC and of the RBI. I doubt if they will announce anything in terms of a contingency package of any kind right now, because it's not warranted. We still have to wait and watch to see if DHFL actually pays out whatever is due over the next few days. But I think you're absolutely right. I think RBI and SEBI and the government will be ready to step in if there is any hint of a contagion coming through. I don't think they'll get worried about individual names having trouble. But if there is a possibility that this might spill over to the entire financial ecosystem, other entities which have real estate exposures, NBFCs in general, banks, mutual funds, and so on and so forth, then they'll have no choice but to step in. I think what they might reiterate at the press conference particularly, Governor Das will probably say that he stands ready to act, that he's watching NBFCs very, very closely. And I think they have ample tools at their disposal to ensure that there is no undue panic in the system. I just hope it doesn't stop at this, RBI and SEBI doing all the heavy lifting. There are lots of real reforms required for NBFCs and the economy as a whole. We can't just make this a discussion about liquidity and interest rates and transmission. There are other real reforms to be conducted as well.
Okay, that point is taken, Anant. Real reforms need to be conducted. Jayesh Mehta of Bank of America is joining into this discussion as well. But Upasna, what is your expectation from the RBI today in terms of commentary, rates, as well as the liquidity scenario?
I'm looking at a 25 basis of rate cut.
From an MPC perspective,
okay.
they would rather.
Jayesh, we'll just come to you in a second. Let's just Upasna complete her answer.
Sure. Yes, so 25 basis of a rate cut is what I'm looking at, along with, of course, like all other members pointed out, there is a need to assure of liquidity which is going to be surplus and comfortable. It's not about just June liquidity conditions which have turned surplus. It was expected that as government starts spending, the liquidity situation will gradually start improving. Anyways, core liquidity was positive because the government had positive cash balances even in the month of until the month of May as well. So yes, the liquidity conditions have been improving, but I think there is a little bit of communication that is required to assure of surplus liquidity a little bit on a sustained basis, which could provide some kind of an improvement in terms of transmission. But having said that, I agree that there are other issues which also need to be resolved, one of them being credit issues, and without that, we cannot really expect a significant revival in sentiment. So less of liquidity, more of credit issues which are right now plaguing the sentiments, and that will need to be addressed. Of course, the least we would expect is the governor really kind of providing an assurance. Like Anant really pointed out, I think nothing much can be done right now, but the assurance of being able to assist the system when the need be, that in itself would be a big investor boost, a big boost to the confidence. And I think that is something which probably we are looking forward to.
Okay, Jayesh, over to you. What is your expectation? You started off. Okay, continue.
Yeah, so I think, of course, everybody is expecting 25. I would go with that. Of course, scenario is they can go for 50, but I think they will wait for one more policy and maybe go for 25. Definitely stance change. I have never understood what that really the stance change means, but yeah, the market would be happy if it is rate cut and stance change both together. Beyond that, I don't really expect much at this juncture, because even if you look at the credit issue, that would be outside the MPC, and that will come separately, maybe in Q&A or something like that, but not as a part of the policy package. I'm not sure, but I think, as Upasana said, very well, we need to have a stance clarified from RBI saying that, yes, when we are cutting rate, we will keep the systemic liquidity surplus. I think last 4 years, me and Anant have been fighting that a lot, but hopefully we see the change. I think except for demonetization, we never saw surplus liquidity. So I think we need to have a sustainable surplus, not frictional surplus that the government has spent, and like, you know, maybe June, July, August, you might have surplus. I think we need an assurance for a reasonably long period of time. And in case, you know, whenever they are raising rate, you keep negative liquidity, that's perfectly fine. But when you are cutting rate, you need to have surplus liquidity.
Jayesh, the credit issues which Upasana was referring to and Anand was talking about as well, what are your thoughts there? Should they do something? Should they address that issue in some way today?
I don't think today's the MPC's mandate is not really into that, as I understand. But yes, what is really required, there's nothing much can be done. Liquidity is anyway there. They can't do any specific company or situation. Only thing is they need to make sure that, yes, people, when they get feared on credit, it does not get spilled over to other industry, other MSME. And for that, we need to make sure that banks are back into lending. Even though now we have only 5 PCA bank, but the lending is still not there, right? Their mindset, I think banking needs to get cleared. We cannot grow economy just on NBFC. We need to have banking as the main driver for the economic growth for the credit. And I think which was missing. If you look at last 2-3 years, even though 11 banks were PCA, there were almost 17-18 banks were not lending. So we need to get banking back into lending, and that is we will have to see how they get it back into lending.
Okay. Mr. Mahajan, if in case there is a reiteration from the RBI today about keeping liquidity in surplus going forward, do you think that banks would then start cutting or transmitting much more easily?
That's what I said. You know, liquidity presently is not pure liquidity. Liquidity is also credit related, and also what has happened is that even if the surplus liquidity is there, how much will it be coming to the banking sector is also important. Like during elections, we have seen that lot of money is in the pockets of the people. So that also is affecting. But if that money also starts coming, surely there will be a transmission. Of course, with a lag, but yes, past 50 basis points, yes, it is overdue. That might start.
Anant, just to come back to the NBFC bid, right? I mean, the issue is, of course, the default rating, but also how many notches you get downgraded by in a single day. I mean, like what we've seen with DHFL. In such a scenario, do you think anybody is going to touch, paper from any of these NBFCs? I mean, will NBFC spreads blow out? does that need some sort of redressal? Jayesh's point about not just focusing on NBFCs but banks in general is absolutely well taken. But right now we have this problem in our hands. So how do you address that?
Oh, absolutely, Prashant. I think you hit the nail on the head. The issues go into deep issues of trust deficit, and that's the core issue, really. There is only so much that liquidity and lower rates can help. That doesn't mean that money will flow into these credits, simply because there is a trust deficit right now. Now, how do you resolve this? You can't resolve this overnight, but you have to start taking steps right away. At some stage, you will have to do some kind of a credible asset quality review to reassure investors that the asset quality is not as bad as people fear it to be. Or even if it is, make a clean breast of things, bring in capital, do the reforms, change management where required, and bring back confidence into the system. Second, in terms of the financial market infrastructure, there are issues. Credit rating agencies, as you pointed out, the issue of lack of liquidity in secondary markets in corporate bonds. That's another core issue which needs to be sorted out as well. So these are again issues which have to be tackled. They're onerous issues. They cannot be tackled overnight, but you have to make progress there as well. Third is the entire financial services ecosystems requires reforms. It requires reforms and capital. And again, very little to do with rates alone. So all of these reforms have to continue. Yes, liquidity and rates can be a palliative and a painkiller for now. But in the absence of real reform, we are just heading to the next trouble, because let's not forget, we have fiscal issues, we have current account issues, and now we're going for monetary easing as well. That's never a good concoction.
Okay, well, we just about have 2 minutes left for policy. Upasana, just quickly, if you could briefly tell us what is the probability of a 35 basis points rate cut today and a 50 basis points rate cut?
Eta, I would see very low probability of a 35 or a 50 basis. 35, firstly, I still am not sure. I think it's just come about from the governor's previous speech, but it's either 25 or 50 still. And for 50, I would assign a very low probability. Like I again said, maybe a liquidity stance or a clarity on liquidity is more important at this point in time than just providing, because the previous transmission itself has not taken place yet. So 25, and along with that, of course, we should not forget that although yes, the monsoon-related risks have subsided, but we are still, we yet have to see at least a reasonable 1 or 2 months of good monsoons. And maybe it is a better approach to go in a staggered way. We are looking at another 25 basis of a rate cut, but in August, and not right away 50 basis.
Okay, all right. So that's the expectations coming in. A no probability or a low probability of 35 basis points or 50 basis points.